Hi everyone, I'm Raul Harad, CEO of DeepSafe, with another stream. Last stream on Monday, we discussed a little bit about the price of Bitcoin and its crash, and a little bit of what drove that. And some of the questions that have come from that have to do a little bit with navigating, let's say, global trends and compliance and some of these future hurdles, but making sure that it is done within regulation. Now, the challenge for this is the fact that regulation in many countries is still unclear, in many inexistent, in fact. And so when we get to the international stage, the confusion is even more. As you can imagine, if countries don't have their legislation together for internal control, it is unlikely that they'll have any sort of international cooperation agreement. But I wanted to talk to you a little bit about what we see happened in 2025, how we interpret that in terms of regulation, and what we see coming in terms of global regulatory trend. So in 2025, one of the things that we saw was a rapid evolution, as I mentioned, particularly in the regional or in the country side of things for frameworks. And the idea is to harmonize the oversights while balancing the innovation and the security. So compliance solutions are advancing through the adoption of AI, and future regulatory hurdles revolve around technology novelty, cross border complexity, and the escalating scale of digital finance. We've seen how much this has grown in the last few years, particularly last year, in terms of funds going in, with the approval of ETFs for Ethereum and Solana. So there has been a lot of capital injected into the system, and while, of course, the price crash of Bitcoin means that there was a lot of liquidity taken out of the system, we're still at levels that are quite high when we compare it to, say, a year, 2 or 3 ago. So, in terms of the US, what we've seen in regulatory trends is the integration of digital assets into the broader financial regulation. So, sharper guidance, steps towards responsible innovation. So, what we're seeing there is really integrating all of the crypto assets into the existing financial regulation. Whereas in the European Union, what we've seen is the Markets in Crypto Assets Regulation, or MICAR for short, which represents a major milestone in providing a harmonized framework that promotes legal certainty and encourages global convergence. As we can imagine, the EU has a more difficult or a larger challenge because it's composed by separate countries, separate states, whereas where we have in the United States is just one union, right? So you can develop federal laws that will apply across the states, whereas in Europe, having different countries makes that a little bit more complicated in terms of approval. In Asia Pacific and Latin America, what we've seen is really a deployment of localized rules. Singapore, for example, has introduced very strict KYC or Know Your Client demands. We've seen really a fragmented environment there. We don't see any really harmony, let's say, in terms of global trends. That said, what we have seen is a lot of Latin American countries adopting either the US or the European Union regulation or a combination thereof. And internationally, what we've seen is a trend towards collaboration, with many of the jurisdictions seeking global standards to prevent regulatory arbitrage and enhance consumer protection. Again, at the end of the day, because this is a decentralized technology and we have users around the world and no centralized control, we need to make sure that any international cooperation is coordinated. All right. Otherwise, having local rules would really only apply to things like on ramps and off ramps and things like that local to the country. But anything that happens in the decentralized world would still remain completely aside, or let's say outside of regulation. In terms of compliance solutions, what we've seen is AI and machine learning now powering leading compliance tools. So this has reduced false positives in transaction monitoring, and it has enhanced real-time analytics for anti-money laundering, so AML, as well as counter-financing for terrorism, CFT. So, one of the notable compliance providers, such as Elliptic Chainalysis, Crystal Blockchain, they provide end-to-end analytics and monitoring services. A lot of RegTech partnerships are fostering solutions that will be, let's say, multi-jurisdictional in terms of compliance. Decentralized identity solutions and blockchain analytics are also being adopted, enabling transparent, uh, privacy preserving identity verification and transaction tracing. Now, this is very important because, of course, one of the attractive features of blockchain in general, aside from decentralization, is the privacy factor, right? So you have to balance regulation with privacy. You have to balance transparency with privacy as well, particularly when it comes to the users of um, the ecosystem in general um, for all of these crypto assets. Um, the compliance software market is expected to see a significant growth, particularly in the US and Asia Pacific, where they really are working on mapping solutions that will be useful for businesses that are engaging in cross-border um, transactions with crypto assets. One of the things that we've seen that is happening now in terms of the high level global trends is the harmonization around AML and CFT and the travel rule, right? So what we've seen is that what we call VASPs or virtual asset service providers have really updated and tightened um, their controls in order to comply with this travel rule. We've seen regional rule books arriving, particularly, as I mentioned, in the European Union, as well as US policy shifting and enforcement, which we do have to highlight has been a bit uneven. It really, at the state level, can be different, but it is something that at the end of the day is regulated by the SEC, which is a federal agency, and the CFTC. Focus on consumer protection, custody, and transparency. So this, as I mentioned, has been important. Regulators are prioritizing custody standards, reserve attestation for stable coins, clear token classification, right? Is a token a security? Is it a utility? Is it a commodity? But also, is a token debt? Is it equity? Is it a combination thereof? So really understanding the behavior of tokens as a financial tool, which is very different from what we have in the fiat world, right? Um, Now, in terms of practical compliance solutions and tools, there are a few to highlight. So anything that has to do with KYC, so as I mentioned, know your customer. So anti-money laundering tooling, and CTF tooling is going to be extremely important. Now we're talking about AML case management workflows. We're talking about decentralized identity verification, ongoing monitoring of politically exposed people, which we call PEP, and sanction screening. So this remains still like the first line of defense to make sure that anybody that's entering your ecosystem is, let's say, to a certain degree, control that they're not someone that is potentially engaging in illegal activities. As I mentioned, the travel rule and the VASP connectivity. So the travel rule solution really is helping create message standards like VASP to VASP, which are secure relays and or network nodes actually, and they really serve to share the originator and the beneficiary data while logging proof of delivery. So supervisory guidance emphasizes enforcement of travel rules expectations. Things like custody insurance and proof of reserve. So we've seen institutional custody arrangements with audited proofs and insurance products. For stable coins, on-chain reserve disclosure and third-party attestation are becoming mandatory in certain areas. So, like MICA in Europe. RegTech and automated reporting. So, automated regulatory reporting, such as transaction reports, suspicious activity, that sort of thing, and policy engines that codify local rules to support multi jurisdiction operations. So, this is important because they're able to take the local rules of a country, turn that into code, and make sure that across jurisdictions, the codes that apply are actually enforced. We have legal structuring and licensing. So this relates more to entity structuring to separate token issuance from, let's say, custody and trading activities. Obtaining required VASP licenses or passporting via regional regimes is a common approach. So you will, when you establish business in a different region, you will make sure that you have to, or that you obtain the local licenses in order to operate. And in order to do that, you have to obviously comply with local regulations. And then we have DeFi risk controls. So for teams exposed to DeFi, smart contract audits, Oracle monitoring, circuit breakers, on-chain limits, and tailored KYC for on and off ramps were possible. OECD, sorry, and academic reviews stress really the policy challenge of DeFi's non-custodial models, right? So this is a challenge that arises from the new use cases, the technology, and that has to be eventually addressed. In terms of near-term and medium-term hurdles, uh, what remains difficult is still cross-border fragmentation. So as I mentioned, different definitions, licensing regimes and enforcement priorities mean compliance is complex and extensive for cross-jurisdiction players. DeFi and non-custodial services, so applying KYC and AML rules to smart contracts and permissionless protocols is legally and technically very difficult. So it raises questions about how VASPs will enforce rules without central intermediaries. Privacy versus surveillance, as I mentioned, privacy enhancing technologies and privacy coins conflict with AML expectations. So we need to strike a balance between user privacy and the need for traceability with um, transparency. This is going to be something very important. In terms of stablecoin risks and reserve transparency, large stablecoins blur payments and monetary policy. So regulators want robust reserve rules, redemption guarantees, and disclosures. We've seen movement on this with MICA in the EU. And to ensure really what they want is real-time auditable reserves without leaking sensitive commercial information. So this is still a challenge. And then we have capacity and talent gap for regulators. So rapidly evolving technology requires really upskilled supervisory staff. And in some jurisdictions, there is a lag in terms of resources and technical capability. So that makes it very difficult not only to develop the laws, but also to enforce them. And this is something that is a challenge in many countries. We, the regulators always have a challenge with fast moving technologies, emerging technologies, because they don't know what's coming next. And so they're always playing catch up, they're always trying to regulate things once they've come into existence and not before. And so it's very difficult, right? At the same time, collaborating with, let's say, the people that develop this technology is good in terms of having ears to the ground, but you can't have the people or the companies that are going to be regulated create their own regulations, right? There's an obvious conflict of interest there. And so, really, what the regulators need is top talent in-house that can not only understand the technology, but also have the vision to have an idea where this is going and to try to stay ahead of the game, whether it be creating, let's say, some blanket regulations for potential movements and then developing more detailed case specific, let's say, rules or regulations, or whether it is just staying ahead of the game and trying to create regulations that will apply to things that are coming into existence. In terms of actionable checklists for compliance, legal, or product teams, so the first thing is, of course, map your regulatory footprint. So list the jurisdictions that you touch, whether it's for users, liquidity, banking rails, and the applicable regimes, and make sure that you're complying with those. Classify tokens and exposure. So for each type of token or service, determine likely classification, right? Are you dealing with a security? Are you dealing with e-money? Are you dealing with a commodity? And the downstream license implications that may come with that. Also, as a good kind of practice, this helps provide information to the regulator, which shows good faith, and they always appreciate when they see that you're making an effort to stay within regulation, and where you weren't clear. Usually, what they tell you is to document what you're doing and then present it, right? So this is obviously very, very useful if you classify your tokens and their potential exposure. Implement a travel rule roadmap. So again, if you move value across wallets or exchanges, make sure that you deploy a travel rule messaging Slack and an interop with counterparties. Adopt enterprise on-chain analytics and SAR pipeline. So integrate analytic vendor, configure risk scores, link case management for SAR or SFAR filing. All these things will help not only automate and facilitate the workload, but stay within the rules. Strengthen custody and reserve practices. So obviously, this is something that is still very much self-regulated, but if you use institutional custodians, obtain insurance when possible, publish periodic attestation for assets, particularly for any stablecoin product, this will also be very, very helpful in terms of staying within the right side of the law. Engage with regulators and use sandboxes. This is very important. A lot of the time, people don't realize that uh, regulators have put sandboxes in place, and this is done for a reason, right? This is done so that you can not only test your technology, but also so they can see what your technology does and then help you navigate the regulation. So, really, these people are experts. It's super important to engage with them. And if there is a sandbox, make sure to use it. It's the best way to ensure that later on, when you're scaling, you will remain within uh, regulatory requirements. And then finally, for DeFi exposure, just require KYC at on and off ramps, um, force the whitelisting for large flows, maintain emergency kill switch capabilities, where you control off-chain components. This is very important. If for any reason you need to have a kill switch that, or you need to activate a kill switch, of course it needs to be in place. In terms of future, excuse me, regulatory hurdles, the first one we see is the decentralized and rapidly evolving nature of crypto compliance regulatory enforcement, which often is outpacing legislative updates and leading to gaps in oversight, as I mentioned. The differences in national approaches and legislative philosophy also presents a hurdle in terms of achieving global harmonization. So as I mentioned, this creates, if it's not harmonized globally, this just creates pockets where potentially there could be arbitrage, or you could have easier, let's say, requirements, and that makes people or companies go to those jurisdictions. Uh, Regulation of new technologies such as stablecoins, decentralized finance, and blockchain interoperability is very much a growing focus. And of course, this is something where DeepSafe excels and is the leader of what is coming next when it comes to interoperability, when it comes to stable coin development, when it comes to really having that verification layer that is so important to make sure that protocols are working as they should, that there is no risk involved, and that you have uh, the controls that you need when there's a problem, if there's a problem. Regulatory frameworks for stablecoins are being debated, particularly with regards to reserve transparency and risk management. So if you have a stablecoin product or service, that is something to definitely keep your eye out for. how that evolves. And then stakeholder engagement, of course, remains limited. So making it difficult to address the perspective from, let's say, different participants in the industry, institutional investors, DeFi innovators. So really, there needs to be a cooperation and collaboration, legislation or regulation that is coherent, let's say, and that across the board and in different countries really takes into account the different stakeholders. So just to conclude, the regulatory environments for crypto assets is becoming more coordinated and technology advanced. This is good news, but we still have considerable challenges that persist. Keeping up with innovation, ensuring effective global cooperation, and fostering solutions that do not stifle the sector potential is going to remain one of the challenges for 2026. Um, but the industry is moving in the right direction. And so this is something that we're very much looking forward to. All right, with that, I'll leave you guys. Thank you all for being with me today. And if you have any questions, as always, please don't hesitate to reach out via our official channels